Hey, welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can check out all of our terrific podcasts at americastalking.com. To support podcasts such as this one, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, October 18th, and joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist and columnist at thecentersquare.com. The week ahead, I think, is one of my favorite parts of content that we offer at the Center Square. You map out the things that are coming up and put a little bit of thought behind what they may mean. So, as far as it goes for the coming week, what's on your calendar, sir?
Yeah, it was really cool. I see a friend of mine literally said, hey, where did you get your crystal ball? And I was like, listen, I don't have a crystal ball. It's just common sense stuff, right? So I look at the state of the consumer, or at least I try to assess the state of the consumer. How do we do that? We look at the income side of the balance sheets, right? So you're looking at the labor market, right? Wage growth. You're looking at the stock market, right? Potential returns on investments. You're looking at, right, of course, interest rates matter. You're looking at the housing wealth, right? The wealth, right? So financial and housing wealth.
Mm-hmm.
And the consumer's ability to borrow. And that gives you a pretty good picture of the income side. And then you turn to the other side of the budget constraint and you look at, whether consumers are saving a higher share of their income or spending it. And when you look at that, you take that full picture, what you learn is the labor market's strong, the stock market's strong, housing wealth is near an all-time high. The income side and the consumer, by the way, especially that consumer, which is the majority of consumers, homeowners, have the ability to borrow. They have the ability to take out, these 0% introductory rates on their credit cards and shift over costly debt to cheaper debt. And so, they have the ability to continue to spend. So they, if they chose to do so, right? And so, there is a pocket of the population, particularly younger households, that is somewhat strained, right? They can't really move from job to job that much anymore. They're kind of stuck in their current position. And at the start of their careers, that potentially means that, it's not a high paying job, right? At the same time, they're facing higher credit card and auto loan delinquencies, right? They're falling behind on those payments. So you have a segment of the population that is somewhat strained. But for the most part, the U.S. economy is the U.S. consumer is humming along just fine. And so that's how I start my process. And then, you look at next week, right? So first of all, this week we called it spot on. Retail sales surpassed expectations. You look at home builder confidence is up. Housing starts, single family housing starts increasing, up 5.5% when compared to a year ago. So yes, housing starts have fallen on the headline, but that's driven mostly by the slowdown in the pullback in starts from the multifamily sector, in part because we have more buildings with 5 units or more being built right now than any time since 1973. Right, we have so many apartment buildings going up, either under construction or being completed. That builders have to finish those projects first before they start building new buildings.
Right.
Anyway, so that's so we got it spot on again last week, and now we go on to next week, and we got existing home sales. So what do we see in the data? Existing home sales are likely to tick higher slightly. So sorry, let me rephrase that. tick lower. They're
Okay.
falling. They fall during the off season, the slow season, but they're probably going to fall less than expected. And the reason is, if you check Zillow data, their Zillow monthly housing market report is out already. You see that buyers and sellers came back to take advantage of the decline in mortgage payments, in mortgage rate. Typical mortgage payments down 7.5% year over year, when mortgages fell in August and September. And so likely to see sales falling as they're expected to, but not, right? Sales falling as we expect during this time of year, but not as much as normal, right? Less decline than expected, because you have slightly stronger activity than normal for this time of year. Initial jobless claims fell again. I don't expect them to increase, because the labor market's strong, and all that spending is going to translate into, low layoffs, and businesses aren't going to continue hiring rates are not going to continue to decline. They're probably just going to flatten out from right here. New home sales. I don't see them falling either. I think new home sales will actually increase for September. We'll see that next week. And so, and consumer sentiment. Consumer sentiment is likely to rebound. Energy prices falling, strong wage growth, combined with strong wage growth is just a positive for households, for consumers, for consumer budgets, for household budgets. And so that kind of concludes my view of what's to come in the week ahead. We're going to have some Fed speeches as well, of course. But the Fed's in a weird place, right? Because the economy is pretty strong. It might cut 25 basis points. But again, the economy is strong. It's not going to cut 50 basis points. And some economists even think the Fed might have kind of put itself against the corner, because it promised rate cuts, and it might not deliver as many rate cuts as it promised. So we'll see.
When's the next time that we would hear on rate cuts? What's the date on that?
It's November. It's next month. Okay. In fact, we'll talk about it on this show ahead of the rate cuts, and maybe we can even do a special episode.
I think we should. All right. I appreciate your thoughts as always. For Dr. Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of fantastic podcasts at America's Talking.